We see huge changes in the energy sector, but will there be sufficient capital available for the energy industry to finance the transformation? Huge changes are also seen in the global macro picture. How will this influence business and banks like DNB? These were just some of the topics ONS project manager Anne Eken discussed in her talk with DNB CEO Kjerstin Braathen.
How would you describe the current global market situation?
Well, I think there's one word that really describes the current market and economic situation, and that is uncertainty. An unprecedented level of uncertainty, with the economy having been hit by three major shocks: a demand shock, a supply shock, a shock into the oil industry, and of course all of this derived by a health crisis in the origin. The level of uncertainty, I would say, is lower than it was in March and April, but still much higher than we would see it in a normal situation. As for the economy, I would even though say that it has fared better than I think many fared in March and April. We've seen unprecedented intervention from central banks, from governments, to the magnitude of $10,000 billion being inserted into the economies, and this has taken an effect, but we are still far away from a normal situation, and it's too soon to say how this will really end up with the economy going forward.
So with the COVID-19, we've seen a lot of volatility in the energy markets. How would you expect us to see the market look like coming out of all of this?
Well, I think there's so many aspects to talk about coming out of this. No doubt COVID will change markets, it will change the world. I think a few aspects to mention is look at behavior, look at consumer behavior, look at payment patterns as one, and how the value of digitization is appreciated. Economies that are well digitized have fared better than those who are not. This is accelerating changing trends many times over. So in many areas it's increasing the pace of change. For us working in business, we are thinking about how will work flexibility impact this. We have had very good experience with remote working. I think all of us are thinking about how we in a larger degree can look for more flexibility and more remote working. On the negatives, a setback for globalization and trade, certainly. Understandably, I would say, in certain areas of the health sector, given medicines and equipment, that people would look to reduce vulnerability. But I hope that this will not lead to an even increased polarization and lack of cooperation. And I think there is reason for hope when we see what Europe has done with their new package of 750 billion, which is the first time they have cooperated, not through the ECB, but from a political point of view, with the immediate positive impact this has had for the euro and the belief in Europe. So there is hope, but still uncertainty.
When we're looking at the global macroeconomic developments, how do you think this will impact global businesses and DNB in specific?
Well, this is already impacting businesses to a large degree, obviously different from one industry to the others. Some are suffering from reduced demand and reduced growth, whereas others are actually thriving. We now see the technology companies together representing 25% of S&P, and they've just been growing and growing through this. So there's a variety across sectors. But for most businesses, slower growth, tougher to meet financial targets. Certainly for banks, living in a zero interest related environment is a challenging frame for the business that we are running. And at the same time, change that is accelerating. So I think businesses need to look at both how to really step on the accelerator for the change and the innovation they are running, while at the same time narrowing their focus and increasing efficiency in order to deliver in the time that we see ahead.
The energy industry is going through a big transition in many ways. How do you think this will affect their access to capital?
There will be access to capital for good projects, but talking about the energy sector and access to capital, it's very hard to talk about it as one sector. We need to talk about the renewables on one side and fossil-related fuels on the other side. And I'd say two drivers are important. What is the underlying risk on one hand, and what is the supply and demand balance of capital? If you look at renewable, ample supply of capital that is looking for opportunities in that area, and there is ample access to capital. Over to fossil fuels, I think both the risk is increasing alongside the expected transition or the ongoing transition, I would say. And it's also a tougher pressure in terms of supply and demand, because less capital is looking for those type of projects. That being said, there's no doubt that there will be capital for good projects. But good projects means a proactive relationship to the underlying risk, a proactive dealing with the need to move in the right direction towards a more sustainable balance. And we will continue to have fossil-based fuel production for many years. That will be important for the economy. So it's really the challenge to manage it in the best possible way.
Some people predict that the COVID situation will speed up the energy transition so that we'll see a lot of investment in renewables. Could it be a challenge that many of the renewable projects tend to have a lower profitability than typically oil and gas project? Could that affect the access to capital?
I think we will still require or look at profitability. That is part of the risk assessment. We and other financial institutions need to see a balanced risk. I am a believer that what we are going through now will actually accelerate the transition. But this transition will still go on for decades. It is a long transition, but there will be more investments into infrastructure. I think the awareness and the sense of urgency has increased, but we need to find ways of making it with a transparent path to profitability. We have specifically targeted our role and set ambitions for raising capital to the renewable industry, as an example. Until 2025, we have said that we will help raise 450 billion to the renewable sector. We will not compromise on returns while doing that. But of course, what we do when we've set such a target is to invest into resources, we build competence, and this is also what we see going on in the industries, and this is how we need to build that industry, through competence and a path to profitability, because without profitability it won't develop.
Audio Jungle. Audio Jungle.
So over the last couple of years, we've seen increased focus on sustainability and climate risk with regards to financing. Could you elaborate a bit about how you've seen these developments?
Certainly. I mean, we put it together with environmental and governance. So ESG is something that we have focused on, I would say, for quite a long time, but it has certainly intensified over the past 5 to 10 years, and in particularly related to the climate aspect. So intensifying this for us means targeting support, as an example, to the renewable sector, but also we work a lot on the risk understanding and on our dialogue with the companies to talk about the risk and the understanding of the risk and the path forward towards a more sustainable future. We do actual considerations of these risks on any transaction we do that is above 8 million Norwegian kroner. So for every case that we process within the bank, we look specifically at the ESG risk. We have an active dialogue with our customers, and we have selected an impact and support way or path rather than exiting these industries, because they will continue to be important for us.
When considering, different companies' focus on this, are there a big difference between different industries, and are there a big difference if you look at different areas globally with regards to the focus on this?
I would say yes to both. This has been a longer focus in the West versus the East, and it is a different maturity within industries. And I think the energy sector is getting there, but of course also the energy sector is a sector that has both a huge part of the challenge, but also a huge part of the solution. And I think increasingly we see more focus. We see the topic getting higher on the agenda, but there is still room for more, I would say.
And with more depressed economies, coming out of COVID, do you think companies can still afford, if we could use that word, to still have the same focus on sustainability and climate? And
we cannot afford not to. I think this is the big difference today compared to 5 years ago. 5 years ago, we would typically talk about what kind of initiatives could we, as a provider of capital, entail in this area, and we were uncertain as to what our impact would be relative to competitors. Today, this is a completely different picture, and you see that across capital markets. There is huge pockets of capital that won't be available for companies or industries that aren't conscious on their impact on the environment and that don't have specific plans in order on how to improve. This goes all the way from the holders of the money, where they are asking the portfolio managers to make sure that their money is invested into an area that benefits the environment and the society.
So DNB is taking a position to promote and support scale-ups and startups and early-stage companies. Why is this an important area for DNB?
This is an important area for the economy. And I think to clear the startups and smaller companies are major and key drivers for growth and innovation. And we need growth and innovation. I think we need growth and innovation worldwide. In particularly, we need it in Norway, as we are moving into a future that has a different business and industry pattern than what we have had in the past. We see how the smaller companies are pushing the larger to develop and innovate, and we see how smaller companies are the key builders of new work for people. And this is also where most of the people work. So we really would like to and are committed to fueling this development and help more than 5,000 people start up their business every year. We help them with capital, but even more importantly, we also help them to meet up with other type investors, because often they require equity and not debt.
And do you think that innovation and entrepreneurship may even be boosted coming out of this COVID situation? What have you seen in the market in terms of activity?
I think this will go in phases, but in general, I would say yes. There are several good things about a crisis as well. You see pace of innovation accelerate. You see people coming together. And after maybe an initial phase where the level of uncertainty was so big that we sort of stopped for a while, we see this again coming back into play. But what is important in order to make that happen is government initiatives that we have seen across certain sectors where they are smoothing it out. If you lose all your business overnight, it's very hard to build a new branch. This is particularly true for the oil and energy servicing companies in Norway, where we were concerned initially that investments would go down too abruptly and stop the ongoing transition in these companies, because we need the competence they have in order to build knowledge and solutions for the future.
And you've seen great value from connecting smaller and bigger companies as well.
Yes, I definitely think this is one of the keys. More so also because we certainly acknowledge as a big company that we are not the best suited to solve everything. In the past, you could see companies trying to fix everything themselves. More and more we're working with both large and smaller suppliers. If you take our mobile banking app, you have 3 small, almost startup companies that are providing features into this app that they're much better at doing than we would have been. I think the experience to be gained from a startup, from working relatively early on with a large company, either as a partner or a customer, is extremely valuable. And I really look for the cultural aspect, the cultural learning into an organization like ours, which is large, which is complex, and we need to fight that. And being inspired by startups and scale-ups where things are going so fast, there's so much learning, and we aren't a startup, but we need to act like one in many ways, I think.
So with COVID, we've all been using digital solutions a lot more, and this is just moving fast. How do you think this will change the world of banking? Will you as banks maybe even have to reinvent yourselves going forward?
I think we as banks are in the midst of reinventing ourselves and increasingly digitizing and developing the customer experiences, and our work processes has been going on for quite a while. Today, approximately 1% of our customer interaction is physical. To show you to what extent this already has become digital. That 1% is extremely important, and it is at the moments where we believe we can help the customers with advice and services that require a physical presence. But all of the growth is happening through digital processes. Does that mean that we're done with it? Certainly not. There is much more to be done, and I think what we are seeing now is also accelerating that pace. Cooperation across, looking at the value chains, how they can be coupled together, also in order to enable businesses to be efficient. I think that goes across industries in order to be competitive in a tougher environment. So with the increased pace of change on the one side, changed needs of desires from customers, and the increased need for efficiency on the other side, the key to all of this is really digitization and the use of technology as a tool. So we have been and we are in the process of reinventing ourselves.
And when we think about our, the companies, we've all been home officing and working on the screen, meeting people on the screen. Going forward, do you think we will see a different, will workplaces change? Will some of these changes remain?
Most definitely, I think workplaces will change. They have changed, and some of that change will stick with us. I think everyone I've talked to was actually overwhelmed by how well we have been able to work using remote tools. And all of the maybe latecomers into using digital tools actually had to pass that threshold, and we've experienced the value of a fully digital world. The most fascinating project that I've been a part of working on is when we worked together with the government, with Finance Norway and our digital team, building the solution to give cash compensation to businesses who had lost their revenue. While they were writing the law, the teams actually built that in 3 weeks, and the solution was ready hours after the law was approved. And it was fascinating to see how they actually managed to do that. They didn't have one physical meeting, they had 3 digital meetings every 24 hours, and it progressed in a fascinating pace. The world post-COVID won't be like COVID, but it won't be like it was before either. So I believe in more flexibility. I believe that we can increase productivity and attractivity and innovation through having a more flexible and dynamic workspace. It is, however, not black and white. Competence-intensive businesses need people interaction. Most businesses probably need some part of people interaction. So it will be about finding the right mix and really daring to explore, because this is new for us. And we are certainly committed towards using this situation as a platform to continue to explore on that.
So you touched on it, but in terms of looking into the future of work and the skill sets required both for the workforce and for leadership, will it change a lot to what we've seen in the past?
It is changing, not so much related to COVID in particular, but I think related to the world and how we are working with everything, or a lot of people working with technology as an important factor. Human competence, we as people, we increasingly become the most important competitive factor of our employers. At least that's the way I see it for DNB. And this changes the requirements. Of course we look for people who have trained well and who have a lot of competence, but even more we're looking for skills. Because what you've learned at university, what you've learned in school in terms of knowledge, I mean, that's probably obsolete within a few years after you start working. So it's more about the skill set. How are you able to adapt? How do you live with uncertainty? How flexible are you, and how able are you to continue to learn? Because what we are on now is not education and then a work phase. I think it's actually a lifelong education alongside our work. So we say we look for people who are bold and curious and responsible. Those are the skills we look for when we hire people.